I think it's a win-win partnership, and I must say that the partnership is not just limited to listings. It's also about developing our markets, and so engaging at that level has really helped us to develop our markets, get the domestic investors more interested in some of the new types of products that we're bringing out. And giving them an opportunity to actually diversify risk because we're bringing in international investors.
So in what ways, Gokul, would you say that both exchanges are working together to enable thriving markets?
It's a very particular feature of the Nigerian capital market where, if we look across India, Middle East, Africa, and a lot of the emerging market, dual listing quite often in other markets is a little bit an exception to the rule. However, in Nigeria, what we find is dual listing is almost the norm, and we spend time with Oscar and his team, and also independently, talking to companies. And we discuss dual versus sole, and resoundingly, the one remarkable feature I would say about this market is, corporates, issuers think of themselves as Nigerian champions, Nigerian homegrown companies, and they actually either want to sole list in Nigeria or dual list, and that's a very different dynamic to what we see, in the UAE or Saudi Arabia or India, where a dual listing is harder to win in some of those markets. I think it's the way perhaps our markets work together and how we're complementary, and if we have to always think about it from the context of our clients, our customers. And why does a Nigerian champion, a Nigerian homegrown company want to do dual listing? Well, they want incremental demand, both active and passive. They want incremental liquidity, that's the number of shares that trade in each market, and a greater number of hours that their securities are traded and listed. So I think that's the dynamic that fuels our pipeline.
Now, as a follow-up to Gokul's pointers, what strategies would you say that will be implemented when you begin to consider leveraging cross-border capital markets in terms of achieving economic growth?
We really believe that some of the theoretical benefits that you would get from such a partnership have actually materialized. So if you look at Seplat, for example, there's significant trading on both markets. And when we had the shocks of the last 2 or 3 years, Seplat was one of those companies that continued to trade very well, precisely because of the fact that it was also listed on the London Stock Exchange. So it gave people an opportunity to get in and out of the market. And so that is an example of an unintended consequence, if you will. It's a benefit of the collaboration. We think that for the investing public, certainly they can continue to benefit from dual listing efforts as we bring on more companies and more instruments that allow them to diversify, that allow them to get deeper access to deeper pools of capital, given the status of the London Stock Exchange as a center for international markets. Another aspect of our partnership that we haven't really spoken a lot about is that it's actually a partnership that covers the whole of Africa. So what we want is to bring African champions to both markets and help them to accelerate their growth. Companies that are doing over $1 billion in turnover are growing across the continent. Considering that there are about 27 exchanges on the continent, serving 32 countries in a continent of 54 countries, a number of these companies don't even have a domestic market. And so to the extent that we can support them in their growth trajectory by providing such a platform is something that is of interest to us. And so sometimes it actually makes sense for us to do joint pitches to these types of companies. With the combination of London Stock Exchange and Nigerian Stock Exchange, the dual listing platform, it just made a lot more sense for them.
Now my final question.
Yeah.
You wanted to
I actually wanted to just pick up on one important aspect that Oscar mentioned, which was in relation to Seplat, the offer structure or the trading structure that was developed was actually, a typical, well, a dual listing can take many formats, but often the most beneficial from an issuer and trading liquidity perspective is when we have ordinary shares listed in both markets. And so if you look at it from an international context, if you look at, Royal Dutch Shell or British Airways, now called IAG, they have ordinary shares respectively in London or Amsterdam or London and Spain. If we look at Seplat, therefore, it actually has ordinary shares listed in both Nigeria and London, which is different from when a dual listing is through depository receipts. So therefore what this means is Nigeria has developed, and we with Nigeria have developed the ordinary share mechanism in both markets through the depository interest settlement wrapper. And therefore, as Oscar's team and our team develops the next series of pipeline companies, they have two choices, whether to go down the ordinary shares or the depository receipts. Yeah.
And the ordinary shares is completely fungible.
Yes.
So you can buy in Lagos and sell in London.
Now, I'll take you quickly back to the panel session that we just finished, which focused on positioning the Nigerian economy and the financial services ecosystem in Africa. What imperatives would you say should be leveraged on to attract sustainable foreign capital flows to the Nigerian markets? Let's start with you.
Yeah, sure. And I think, I'd like to talk about it in two ways. I think a lot of the panel focused on the active task of FDI coming into Nigeria. So, people making the voluntary decision to buy this or the other. And I think, the panel did a great job at already, canvassing views there across equity, debt and funds. And I think, in summary, and not to take away from what Oscar is going to say, but it's integrity in our market structures. It's what the gentleman from the SEC mentioned, the rule of law, and then, buyer and seller come together. But what I also wanted to talk about was the passive flow. And, over the last 24, 36 months on a global basis, what we've seen is the emergence and the increase in velocity of the amount of passive flow and index demand that is taking over, global capital flows. And in that regard, as we see more pipeline companies grow, as we see Brent, stay at these kind of levels, as we see market structures develop, we would expect Nigeria to, over time, climb up the various country classification metrics that the various index providers of passive flow calibrate countries on the basis of. And as that happens, that is another sort of crystallization of further FDI from the passive end of the spectrum.